What is up, everyone? It is Dividend Grinder here. Before I get into the portfolio, I just want to give a little context on this video. So, as a way to thank my subscribers and all my viewers for making it possible, every month that I earn at least $100 from YouTube, I let the subscribers vote on a poll that I put out on my channel, and the winner ultimately gets decided where $100 in my portfolio goes. For this month, as you can guess, an ultra high dividend yield pie has won by a large landslide. So that is what we're doing. Now, please note, this is a highly experimental pie. I do not recommend these holdings to anyone. Let's get that out of the way right now. This is very risky. I would not recommend these stocks for any long-term investors at all. With that being said, let's see what's inside. All right, on M1 Finance, I created this pie during my lunch break at work today. Ultra high yield dividend pie. In the caption there, it says subscriber experiment. Let's see what's inside, and it's going to be funny when you first look at that. Look at that. Past 5-year performance since November 24th of 2014. Minus 30.98%. That is ugly. But keep in mind, when you're looking at these, it is strictly capital appreciation. It does not factor in the reinvestment of the dividends, and you'll see that this one has a lot of dividends to behold. So we scroll down, 13.7% dividend yield and an absurd expense ratio, which I don't know if it's accurate. I need to look into, of 4.12%, but a dividend yield of 13.718%. And the three companies that make up this pie are Eagle Point Credit Company, Miller/Howard High Income Equity Fund, and Oxford Lane Capital Corp. So let's take a dive into each one of these three just a little bit. So Eagle Point Credit Company, I want to do a little more research to see if this is actually accurate. But M1 Finance has shown an expense ratio of 9.85%. Now, if you're new to investing, an expense ratio is simply what the managers of this fund, of the Eagle Point Credit Company, take out of the stock for their own management fees. It's their take off pretty much from the price of the stock. Now, the price of the stock already factors in that 9.85% expense ratio, so you don't have to pay anything at the end of the year or anything like that. It's already factored into the price of the stock. But that is ridiculous. I've never seen anything even above like 3%. This one, if it's accurate, 9.85% expense ratio. But past 5 years, I tried my best for these three funds to pick obviously double-digit yields. I tried so the capital appreciation isn't horrible, and I tried to get it where there's funds that haven't cut the dividend in a very long time, or they haven't cut it at all. We're looking at Eagle Point Credit Company. They used to pay quarterly. It was at 60 cents per share, and now they started paying monthly recently, and it looks like it's 20 cents or roughly, M1 Finance rounds up, but 20 cents per share every single month for a $17 stock. It gives you a 13.48% yield. You see, it's a very small company, as most of these funds are, these closed-ended funds. 324 million assets under management. So that's a little peek into Eagle Point Credit Company. Let's look at the other two. Ticker symbol OXLC, Oxford Lane Capital Corp, has a dividend yield currently of 15.47%. It is another closed-end management investment fund, and it's maximized its portfolio's risk-adjusted total return and seeks to achieve its investment objective by investing in finance investments, specifically collateralized loan obligations, shades of The Big Short, the movie The Big Short, with collateralized debt obligations kicking in, primarily senior corporate debt securities. So closed-end management fund. Doesn't say the expense ratio or the assets under management on M1 Finance. Again, I'm going to have to do more research onto it, but I'm not taking this pie too seriously. It's meant for the insane dividend yield, and it's more of an experiment. I'm only putting $100 into it, and we'll see where it goes. I also wanted to pick lower priced stocks so I can get a couple shares, since I'm only putting around $33 into each holding. But again, just like the Eagle Point Credit Company, used to pay quarterly, now it's starting to pay monthly dividends around 60 cents, faded to 40 cents the last two payments, and now it is paying around 14 cents every single month for a $10.60 stock that results in a 15.4% dividend yield. You see 5 years capital appreciation was a little bit worse than Eagle Point Credit at 37% in the red for the last 5 years, but you are getting an absolutely absurd dividend yield, and we'll see if it makes up for it in the long haul. And let's finally look at the last holding. So the last fund that we're looking at, ticker symbol HIE, Millard Howard High Income Equity Fund of Beneficial Interest. Again, a closed-end diversified management investment company, and its primary investment objective is high level of current income. So it doesn't even care about capital appreciation, and that's very evident looking at their 5-year chart, going from about $20 to its current price of $11.56. This one's even smaller than Eagle Point Credit Company, 172 million assets under management, an expense ratio of 2.3, which again is extremely high, but nothing compared to what was Eagle Point Credit Company. A dividend yield of 12.21%. This one has paid monthly for the past 5 years, and it's been very consistent. I don't believe it's 12 cents. I believe it's around 11.6 cents, but it hasn't been cut the past 5 years. It's been consistently rolling out every single month, 11.6 cents. So that is the ultra high yielding dividend pie. Look at it one more time again. This performance of the 5 years past historical M1's looking back at does not factor in dividend reinvestment. And this is based on $100. It would now be at a value of $69 giggity for the past 5 years since 2014 in November. So obviously you're not investing in these for capital appreciation. You're going for pure dividend income. Overall yield of 13.7%, only 3 holdings, going to put $100. That way each of them gets $33. I'll definitely have at least a couple shares of each so we get a good perspective of how it does with the overall market and that absurd expense ratio thanks to Eagle Point Credit Company, which I have to see if it's accurate, of almost 10% expense ratio. That is absolutely insane. But here is the insane dividend pie, 13.7%. It'll be very interesting to see how it does. I will be funding this. If YouTube's consistent with when it got paid last month, it'll be the 21st of April is when I'll actually get the money. So I should be able to fund the pie around that date at some time. Is the 21st a weekday? If the calendar opens, 21st is a Sunday. Hopefully April 22nd, I will actually have this pie into my portfolio, completely integrated with $100. So hope you're interested in seeing how this ultra high yield dividend pie does. You know, I'm into these crazy experiments, so let's see. I mean, obviously I don't recommend any of these holdings for any serious long-term investors or any serious dividend investors. These are not good companies. These are not solid holdings at all, but I live to see these kind of experiments. Let me be your guinea pig. Let's see what $100 in these 3 companies do. If you're interested in M1 Finance, if you're like doing cool experiments like I do, if we're looking back at the main pie, like here, I have 1, 2, 3, 4, 5 pies inside my main portfolio. If you're new to M1 Finance, it's a very cool concept. Commission-free trading, fractional shares. I love M1 Finance with all of me. It's my favorite brokerage out there. So if you're interested, I'll leave a referral link down in the description below. If you sign up using that link and invest $100, you will get $10 for free. This has been the Dividend Grinder. Let me know how you think the pie will end up. See you guys and gals in the next video.